Hello and welcome. I'm Henry Rutherford, a chartered financial planner specialising in helping individuals retire securely and tax efficiently here in the UK. If you're starting to wonder what the upcoming autumn budget might change and whether it could affect things like your pension, ISA or tax-free allowances, you're not alone. There's a lot of speculation right now and it can feel overwhelming. So in this video, I'm going to be clearly explaining what's being discussed, what could change, and more importantly, what practical steps you might consider thinking about now before anything is officially announced. Let's get into it. The autumn budget is one of the key moments in the financial calendar, and it's often where the Chancellor announces changes to pension access, ISA allowance, and wider tax planning rules. And because the government is looking closely at public finances, there's naturally a lot of speculation around whether some of the more generous tax perks, particularly for higher earners and wealth accumulators, could be tightened in the future. Again, at this stage, nothing is confirmed, but being aware before the announcement puts you in a stronger position than reacting to it afterwards. Currently, most people can access up to 25% of their pension tax-free, often called the pension commencement lump sum. One of the biggest rumours this year is that the government could reduce the 25% entitlement for larger pension pots or cap it specifically for high earners. Now, to be clear, we don't know yet if any of the changes will actually happen, but if you're already nearing retirement or planning to access your pension in the next couple of years, this is a sensible time to review your options, rather than waiting and possibly having few choices later, depending on what the budget announces. ISAs remain incredibly powerful because growth, income and withdrawals are all tax-free. Right now the allowance is £20,000 per tax year, but there is also ongoing discussion about whether ISA allowances, in particular cash ISA allowances, could be reduced or restructured. For many people, using your ISA allowance earlier in the tax year can be beneficial, not because we expect rules to suddenly vanish overnight, but simply because it locks in what is already known to be available today. There's also been renewed discussion around inheritance tax, a tax that hasn't been revised since 2009, but there has been speculation of freezing or adjusting this further. Also, potential changes in capital gains tax or the way gains are treated on disposal. If you're planning to pass on wealth, gift assets, or sell a property or investment, it may be worth reviewing timing and structure sooner rather than later. Again, not to rush decision, but so you're not caught out by surprise if the rules are tightened further in the future. So what should you do right now? Firstly, there's no need to panic. Budgets come and go, and good planning is about resilience and not reaction. But this is a smart moment to review your pension strategy, especially if you're coming close to drawing benefits. Check whether you've used your ISA allowance for this tax year and revisit any gifting, estate or business exit planning already on your radar. Thank you for watching, and as always, this video is for educational purposes only and it's not personal financial advice. If you'd like to discuss your own personal financial planning, please feel free to get in touch with myself or your local financial planner. Please do like and subscribe and comment on any topics you would like me to do content on in the future. Thank you.